All right, what is good, you guys? First and foremost, before we get into this weekly recap, let's go fucking Niners today. We are so back. Anyways, weekly recap from this past week. Monday, Tuesday, Wednesday, Thursday. Monday was a bank holiday. Tuesday I didn't trade. Wednesday, Thursday I won, and then Friday I did not trade. So this is going to be covering September 1st through September 5th. So without further ado, let's just get right into it. This is Monday. We had a bank holiday on Monday. Here, let's go to Forex Factory. This is the previous week, right? So Monday, bank holiday, no trade day. None of you guys should have traded. If you did, what the fuck are you doing? Okay. So there goes Monday. Let's jump on over to Tuesday. So Tuesday came around and I sent out a daily bias in the Discord. It said bearish until we start disrespecting bearish PD rays and start respecting bullish. And we also had news at 10 o'clock. So this is what the chart looked like. We had London and Asian highs up here for buy side. We also had an unfilled 4-hour and an unfilled hourly right here. And then below us, we had sell side. So what I was looking for at market open is I wanted to see price come up into some sort of high time frame PDA, right? Whether it was an hourly fair value gap, which we got right here, right? We got our hourly fair value gap. We had another hourly right here, so on and so forth, right? So I was just looking for a just slight continuation model down, possibly to these to these lows down here. And then what did we end up getting? Well, kind of just chopped around up until 1035-ish, and then I don't think we created, we didn't create any SMTs with this candlestick right here. And then I was waiting for price because we did inverse this 5-minute for value gap, right? So from here, I was waiting for price to come and tap into equilibrium of this range or this fair value gap right here. Why? Because, well, this fair value gap is at or near equilibrium of this range. And if we're in a continuation model, those are the type of gaps we want to have for our continuation model, right? We don't want to take the premium gap, or in this case, the discounted gap. We want to take the one that's at or near equilibrium. And as you guys can tell, price did not hit that. And also, look at just how price was moving around this time. Like, you don't want to be entering off of any of this. I rather have just waited for price to retrace into here and then continue lower. At this point in time, it's already 11 o'clock. So I just went ahead and got off the market for the day. As price came down, I think we edged this. I don't even think we took this out. Yeah, we created essentially just equal lows, and then we kind of just did a whole bunch of fucking nothing for the rest of the day. So that was Tuesday. So Monday and Tuesday was very, very fucking quick. Nothing really happening. What I wanted to see at market open is exactly what happened, right? We manipulate higher, create these bullish PD rays. We end up getting a disrespect of this bullish PD ray, but then just no tap for a continuation model, right? So that was Tuesday. Moving on over to Wednesday. So I actually lied to you guys at the beginning of the video. I said I went 2-0. That's cap. I actually went 2-1-1 this week. I forgot I had a break even and losing trade because typically I have them up here already saved, and I didn't. So I went back in my trade journal and I looked. I was like, something looks kind of weird. So we'll go over the loss I took in the morning on Wednesday, and then we'll go over the one I took in the PM. So coming into Wednesday, I was clearly bullish, clear bullish structure. What do we have below us? Well, we have this hourly fair value gap right here. We have this hourly fair value gap right here. And then my bias was, okay, these are my conditions. If we run through both of these, then we have this sell side right here, which was also London and Asian lows. And then we have this unfilled hourly below us as well. And then for buy side, we had buy side right here. We had buy side right here. And then we also had this unfilled hourly fair value gap right here that we can go ahead and target. So what I wanted to see is we kind of had like this higher time frame, middle time frame, like accumulation zone happening. I wanted to see a manipulation lower into these fair value gaps at market open and then continue higher for the trend. So we'll go over my trade real quick. What we ended up doing is we ended up coming down and we created relatively good lows with this hourly fair value gap, which was fine. And then we ended up creating equal lows. So this was a big no-no for me. I was not going to long off this due to the fact that I'm not having equal lows at my stop loss. So what I wanted to see is, okay, we have buy side right here. We have buy side right here, and then this unfilled hourly all the way at the top up here. So I'm now just going to look for a just slight continuation model. That's okay. We have equal lows at our stop. That's completely fine. So what do we end up getting? We end up coming all the way up. And this was my losing trade right here. We ended up coming all the way up. Okay. We swept out these highs up here. And as you guys can tell on ES is nowhere near these highs right here. So we had a bearish SMT. Not only that, these are a 4-hour SMT, I believe. Yeah, these are 4-hour highs right here. And at that point in time, these 4-hour highs were not taken out. So we had a 4-hour SMT. We were also inside of this 4-hour fair value gap right here. Here, let me draw it out for you guys because I know there's a lot of shit on the screen. And we were also inside of this 4-hour fair value gap. So I was like, okay, we retested this 4-hour fair value gap. We got our liquidity sweep of these relative equal highs. We got an inversion of this 5-minute. We have equal lows below us. I'm going to go ahead and enter. So we ended up inversing this 5-minute gap. And then what ends up happening? I believe I set a limit order. I don't think I entered strictly off the 5-minute. I think I set a limit order. Yeah, I got tapped in perfectly right here. So this is what my trade idea looked like. I set a limit order at the inversion. I got tapped in at literally the top of this blue candle. My stops were at the top of this 1-minute order block, and my take profit was at these equal lows right here. So just a slight 1-to-1 trade. The reason I didn't have my stops all the way up here at the swing highs was because it would have been negative RR, and if we truly were going to go down to this fucking equal lows and this unfilled 1-hour fair value gap, well then we should just flush right through it, right? We got our slight retracement up. And then what did price end up doing? Well, price just fucking diddied to the upside and ended up stopping me out. So I was done for the morning from here. I didn't take another trade, but I was looking for a trade. I wanted a continuation model towards the rest of this buy side up here. That was my losing trade. It wasn't an A+ setup. I'm sure a whole bunch of other people got stopped out from that. And as you guys can see, we got no fucking retracement whatsoever. There was no fair value gaps that ended up even forming. And we just ripped up and took out all types of fucking buy side up there. So coming on over to the afternoon, I did take a short trade. Give me 1 second. I'm going to pause this video. All right, I wanted to draw it out for you guys first before I just wasted your guys' time for me to go and find it. So it was a continuation model on ES. It was a 5-minute tap into a fair value gap and a 30-second inversion. Now, you guys might be asking, are we at or near equilibrium? Yes, we are, right? We're directly near equilibrium, okay? So that was enough for me to go ahead and enter. And then the draw was just so freaking clear. We had these lows right here, and it created perfectly equal lows with it. We got a tap into a 5-minute fair value gap that was at or near equilibrium, right? So this is exactly what I'm talking about. And then we ended up getting a 30-second version out of it. So I don't have the 30-second on trading view, but here is what it looked like on Top Step. I went ahead and entered. I entered short off of this right here. My stops were at the swing highs, and then my take profit was all the way down here to these equal lows. And this is what the trade idea looked like. Literally almost zero drawdown. We got chopped around for about, I want to say like 3 or 4 minutes or so. And then we ended up hitting full take profit. And then it was a W exit because we ended up just fucking chopping around the rest of the time. So this is just a beautiful continuation model. Now, the time of the day wasn't the best, right? This happened at 1:54. But if we are going to trade PM, this is the session we want to trade, or this is the time we want to trade right here, anywhere from like 1:30 to like 3 max, right? We don't want to be trading lunch hour, which is anywhere from like 11:30 to 12:30. Anything after 12:30 will be valid if price is moving good, and price was moving good right here. As you guys see, we weren't just chopping around like this right here. Thank God we got out of the trade before price started chopping around, but price was moving pretty good. We created equal lows, super clear draw on liquidity, came up into essentially equilibrium of the range, 5-minute fair value gap, 30-second inversion out of it, and we went ahead and tackled take profit. So we went 1-1 on the day. That is actually my second trade on ES in the past like 2 weeks, and before that I didn't trade ES for like the last like 6 months. Sometimes ES just moves super clean, and then the other 95% of the time it's just fucking absolute dog shit. So that was Wednesday. Let's jump on over to Thursday. I did take a dub, and actually I took 2 trades on Thursday. I forgot I took 1 pre-market trade, which was a break even, and then I also took a market open trade, which was a dub. It was a 5-minute inversion to the upside. But let's go over this pre-market trade first, and I'll show you guys why I took it. So Wednesday we had a plethora of news. Let's go on over to Forex Factory, right? We had 8:15 news, that was red folder. We had 8:30 news, that was red folder, and then we also had 10 a.m. news, that was red folder PMI. So regarding the pre-market trade I took, right, we had data news candles right here. Why? Because it's 8:15, that's data highs. We already took out data lows, and then 8:30 comes along, and we also have data highs right here as well. Now, the reason I took this trade is because we had a 15-minute SMT, right? As you guys can tell right here, we had a 15-minute SMT. NASDAQ swept that out. ES did not sweep out these 15-minute highs. From there, we get a 5-minute fair value gap that opens up. We get a disrespect of this 5-minute fair value gap. So we get a 5-minute inversion, a 5-minute fair value gap for a continuation model. What else do we have? we have this lower time frame accumulation zone. News comes out, we manipulate higher, and then we get a 1 minute inversion. Now, I should have just entered off the 1 minute inversion, but I was confident that price was at least going to retrace back into the inversion area. We didn't end up getting that, and then I seen this candle just coming down, so I just entered off the closure of the candle. My stops are at the swing highs. My take profit was at these London lows down here, right? As you guys can see, we have London lows, we have Asian lows, so we had clear draws on liquidity. It's not just like I was forcing trade and entering off of bullshit. And then we kind of got chopped around, and we ended up coming and filling this 5 minute unfilled for value gap right here. So my bias was, okay, if we come into this for value gap, I'm going to move my stops to break even, because if we truly are going to go to London lows, this slight 5 minute for value gap should not mean anything, right? So what do we end up doing? Well, I entered this trade. I ended up kind of getting chopped around a little bit. This isn't the best price action. This price action was pretty good. We get an accumulation zone, then we get a manipulation, we get a distribution. And then I enter the trade and we kind of just like chop around. See how price is just like so much closer rather than having actual candles. So I ended up getting chopped around. Price comes down into this 5 minute fair value gap. I move stops to break even. Like I said, if we truly are going to go down to London lows, we should just flush right through it. And we ended up tapping it, and I ended up getting stopped out at break even. And then from there, that was really all I was looking for. The only other trade I would have entered off this pre-market is if we came up and swept out data highs and then possibly created an SMT, because ES was a lot closer to these data highs. Maybe we created an SMT and then another inversion out of it, like a 3 or 4 minute out of it. But we just didn't end up doing that. That was kind of a lot to ask for, so I wasn't really looking to trade more pre-market. And then let's jump into this market open trade. So coming into market open, what I wanted to see is we have this like slight accumulation zone right here. I wanted to see price manipulate lower, and then we just continue higher, because why? On the higher time frames, we clearly are just in a bullish structure. So I wanted to see us take out London lows and Asian lows, and then we can look for a long from there towards either these data highs that were about to be created at 10 a.m. or all this resting buy side up here. So what ends up happening, market opens and we just fucking absolutely just do the most violent fucking move for no reason, right? ES comes out and takes out these highs as well, so there's no SMT. And then we have clear targets below. There was really no entry point to enter shorts down to London and Asian lows. However, we end up coming down and we took out London and we took out Asia. And then on ES, as you guys can see, we only take out London. Okay, so what does that mean? That means we have an Asian SMT. Okay, we got a sweep of London and Asia on NASDAQ, and then we also get a resweep of these 1005 lows right here. Okay, we also get a resweep of these 1005 lows right here on ES as well. So that's perfect. We got a resweep. We got our higher time frame narrative with the Asian SMT. And then what is our target? Well, like I said, we had news at 10 a.m. as well on this day. Okay, so here's our data high up here. We took out the data low first. Okay, what am I looking for? Well, I'm looking for essentially just a PDI model, right? Pre-distribution inversion. What do we have right here? We have a 2 minute for value gap in this leg. We got edge right here, this close, and then we ended up getting a beautiful closure right here. So I entered off the candle closure of this, the opening of the next candle, and then we ended up ripping through. This next one is also a 5 minute gap. So if you guys missed this 2 minute, there was this 5 minute right here. Now, I was pretty confident that we were going to push higher towards data highs, especially because we had this Asian SMT. So I did not move my stops to break even. Typically I would at this 5 minute. However, I believe it was, yeah, this 5 minute was already filled. So if this was an unfilled 5 minute gap, I would have moved my stops to break even. However, my break even point was at these internal highs right here. And I was like, okay, we should be pushing higher. Why? Well, because we have a 2 minute and a 3 minute for value gap beneath us. So just in case maybe price wants to hit this 5 minute gap, come down, fill these 2 minute and 3 minute for, bullish for value gaps right here, and then we can push higher. My stops were at the swing lows down here. Kind of a big stop loss, but it was a 1-to-1, so it was fine for me on the day. And then what did price end up doing? We end up coming up, hitting the break-even point and running straight to data highs. Now, most people I've seen that took this trade, they held it towards all this LRL up here, and then they were holding the trade until ES took this final high right here. Now, ES was moving very, very beautiful. We had this accumulation zone, manipulated lower, London, and then we had, I like this LRL a lot better. Why? Because they're all like really, really packed, jam tight, close to each other. Where like this is like, yeah, we have targets, but like see how this one's like way the fuck up here, and then we have like this area right here. So the targets on ES were a lot better. However, I only trade NASDAQ, and if NASDAQ looks okay or even better than okay, I'm going to take the trade on NASDAQ. So It's only like really when Nasdaq looks like shit and ES has a super clear draw on liquidity is when I'll trade ES. But most people held their trade until ES took this high, creating a bearish SMT against their bias, and then they pulled out right here. So a couple more points higher than what I pulled out at data highs, but a 1-to-1 was good enough for me, especially because I was on a crazy break-even streak in the previous week. So that was my trade for Thursday. And then jumping on over to Friday, I didn't trade Friday, but we can go over the scenarios that happened. So I didn't trade Friday. I did drop I guess, market recap, I guess you can say, 101, market analysis 101 on Friday. But I'll just go over the 3 trades that really presented themselves to me, right? So this one was a pre-market trade. I didn't wake up pre-market for this day. I just didn't feel like trading pre-market. But it was a beautiful continuation model towards higher time frame draws on liquidity. So what do we have right here? We have a 5-minute tap into this fair value gap, right? We have news that came out. So here was our data lows or data highs, and then this 5-minute was our condition. So I got asked, why would I long if we take out data highs first? And I was like, okay, well, if we were going to go down towards data lows, we would have inversed this 5-minute gap. So this 5-minute gap was my condition, and then there was also no need to go down towards data lows. Why? Well, because we had an SMT with Asian lows. So yeah, on Nasdaq we came out and took out London lows, but on ES we took out both, and we left Asian lows on Nasdaq. So we had a bullish SMT. We also had a bullish fair value gap that ended up getting respected. And then what were our draws to the left of us? Well, we had all this higher time frame LRL, right? So what we could have done is we could have waited for price to tap into this 5-minute fair value gap, and then we could have just waited for an inversion out of it. Now I don't remember what the highest time frame inversion out of it was. I think it was this 2-minute, this 2-minute right here that ended up getting closed with this candle. Let's go long, right? Stopped at the swing lows inside the gap. Your break-even point can be here, and then your draw on liquidity can be anything to the fucking like left of us, right? We had, what did we have to the left of us? We had like these highs right here. We had these highs, right? We have these highs. So there's just a plethora of fucking high time frame LRL to the left of us that we could have fucking targeted. I would have just targeted this first draw on liquidity. I'm not holding it all the way the fuck up here, right? I would have just targeted this first draw. And let's see if it would have got taken now. I think it did. Yeah, boom. So you would have been out of the trade right there. This was, Jesus Christ, how fucking big is this? That's what she said. This would have been a 1-to-2 RR trade. And beautiful, right? Hardly any drawdown. Enter off the 2-minute inversion. And price would have just ripped all the way up until market opened at, oh no, this is 9 o'clock. Market opened then at 9:30. And then we'll go over what happened in the actual market right now. So that was our pre-market trade that we could have took. Just delete all this shit real quick. And then from here, I don't think we had any more news. No, 8:30 was the only news that we had on this day. So we went and took out that. So now, okay, we're taking out LRL up here. Let's see if we get a SMT. Now, we had a higher time frame SMT with ES. ES was at all-time highs. As you guys can see, Nasdaq is nowhere near all-time highs. Why? Well, because all that LR, we didn't take out all of it, right? So we had a all-time high SMT, and then we also had this miniature I guess like internal SMT, you guys can say, right here. These highs ended up getting swept out, and then on here those highs did not end up getting swept out. So the reason I did not short this down to data lows is, well, because we had an unfilled fair value gap right here, and then we are also respecting at the time this 15-minute as well, right? So it's not like these are 5-minute fair value gaps. These are 15-minute fair value gaps, which hold obviously higher power because they're higher time frame. So what I wanted to see at 10 a.m. is we have this, okay, yeah, we have bearish SMTs, but I'm still pretty bullish on the day. So what I wanted to see was a 10 a.m. open low into these fair value gaps, and then we get an inversion out of it. And we also had equal lows right here as well, or relative. No, they're about equal lows, right? Let's get on our equal low thing. Yeah, so we have equal lows right here, 2 different sets of it. So what I wanted to see is I wanted to see 10 a.m. open low, and then we could have just targeted like these internal highs for our take profit, right? What do we get? Where is 10 a.m.? 10 a.m. is right here. We get exactly what we want to see. That was 9:59. Here's 10 o'clock, right? We get exactly what we want to see. We have a 10 a.m. open low. Even though we have these bearish S&Ps against us, I was still convicted we were at least going to go higher towards these internal highs. Just because we had these 15-minute fair value gaps, like right here, right? So this was my thought process. I was like, okay, if we can get a 1 minute fair value gap to open up, then I'll long towards these SMT highs up here. And then our 1 minute fair value gap forms. Again, we're inside of a 15 minute, so this is just going to be another continuation model towards this LR up here, or not this LR, but these relatively equal highs. And then as you guys can see, we just ended up edging the inversion. Thank God we did not invert it and then just reverse, because I would have definitely lost. And we just ended up shitting the bed all the way down towards these London, or not these London lows, but these data lows right here and Asian lows, right, with no retracement. So that I was then looking for a retracement, maybe into a 5 or 15 minute gap to catch the data lows and the Asian lows. But we just got no retracement whatsoever. We ended up shitting the bed. How much did we shit the bed? Whoa, what the fuck? I didn't know it does that. We ended up shitting the bed about 250 points. So after I seen that, I was like, okay, no retracement. We just shit the bed 250 points. After a big move like that, what is market analysis 101? Well, we're probably just going to chop around. And I believe that's exactly what we just ended up doing, right? We just continued to shit the bed. No retracements really. And then didn't really do much the rest of the day. So there was nothing really on Friday. So I only took 4 trades this week. I hope this weekly recap helped you guys out. If you guys have any questions about trades you guys took this week, leave them in the comments with the day and the time you guys entered the trade, and I'll go ahead and review those for you. Okay. Hope you guys have a great weekend. Go fucking Niners, and I'll catch y'all boys tomorrow for market open.